Hello again, traders. Edge from High Tech Trading Analysis. I'm going to talk to you today about one other indicator that I've developed for myself that I call price times plus. And the reason I call this price times is within the indicator, there are certain levels or times that create levels that I consider significant in the markets that I'm looking at. For instance, I trade crude oil. In crude oil, I consider the opening price, or I live in Central Standard Time, so 8 o'clock open, a significant level that I want to watch. I also consider the equities open at 8:30 to be a significant level in crude that I want to watch. And then I also consider an afternoon time, my 12:30 Central Time, as an afternoon start time that I consider significant enough that I want to watch. So I've configured an indicator that allows me to put in 3 different user configurable start times. I also look at today's high and low. I look at the overnight Globex high and low. I look at my yesterday's prior start times. I look at yesterday's high, low, and close. Not only do I look at yesterday's close, but I look at the previous day's close as well to see where we're in relation to that. I look at prior day open gaps. I look at missed or naked high lows, closes, which would be considered the gap. And I label them with price and the date that it was created. I do a lot of other things in it, and rather than read off of this description, because I've added some additional features to the indicator, let's just take a look at the charts themselves. Okay, so here we're looking at the indicator as it's applied to a 5-minute crude oil chart. And that's a big view. Let's pull this out to look at yesterday and today. So as I mentioned, this was the 8 o'clock opening print for crude, and I print that open. This was the 8:30 equities open, and I print that open. And then this was the afternoon open, or the open at 12:30 my time. Now these are all configurable within the indicator's properties to set those times up to whatever it is that you happen to want to look at. I set my first start time to be 8 o'clock, and I label it opening price. You can set that, if you're looking at the indices, you can set that to 8:30 and call it the open of the ES. And then you can set your price time 2 to be 9:30 and look at the initial balance. So you have 3 configurable start times here that you can set to whatever you want. You can set the Globex, if you want, if we're looking at Globex time periods, to be the start of whichever start time you so choose, 1, 2, or 3. And then we can label those start times whatever you want to label them over here on the right. I keep it pretty simple for myself. Open, equities open, afternoon open, yesterday's open, yesterday's equity, yesterday's afternoon open. And then those are the only labels that are configurable. The rest of them are labeled for you. GH for Globex high, GL for Globex low, PC for the previous day's close or second day, 2-day prior close. And you can't see this one, but this is YC for yesterday's close. These are all levels that I find, for me, of significance and that I want to watch on a daily basis. Now, I can configure this in a couple ways. First of all, we add a icon with the indicator to NinjaTrader's toolbar. And through that, like all the rest of my indicators, I provide a drop-down selection so that we have quick and easy access to turn things on and off and configure things very simply however you see fit. The first thing I want to address is the alternative data. Okay, I give you the ability, and it is set as default, and I recommend that you leave it set as default, to use a 1-minute second dated data series for all of your calculations. This way, when I'm looking at a start time, no matter what type of chart that I'm putting this on, especially if I'm putting this on a non-time-based chart, if I'm applying this indicator to a Renko, to a range, to a point and figure, to anything other than a time-based chart, that bar is not going to close, at least not very often, exactly at 8 o'clock for my start time. So I can't use the close of that bar to calculate the open of crude. If I'm using this on a 5-minute or a 60 or a 240, I would prefer not to wait 60 minutes before I get my opening print. Therefore, I use a 1-minute back-end data series so that all of my plots show up within 1 minute of whatever start time is that I'm configuring. Now, this does not add any overhead or any resources to your chart. Maybe a little, but not significant enough to make any difference at all. If I go into my data series, it looks like I'm looking at 30 days back right now. If I were to change this and look at 90 days back, you can see that it took a couple seconds for the chart to come up, but nothing more than any other indicator would cause your chart to refresh for an extra 60 days of data, even though I'm using it, even though I'm using the 1-minute secondary time series. Now, all of my indicators I've tried to design to be used on calculate on bar close equals true. So we're not actually calculating anything until the close of the bar, which is why we have to wait 1 minute in this case for our plots to start showing up. Now, if I also use the drop down and look here, we'll look at this first of all. Show Globex pre-RTH. Now you can see on my chart right now that I'm starting to plot Globex right on Globex close, or right on the first bar of the open. I start to plot where Globex high was over the night. Now, here's the high of the day with a diamond and a price, and a diamond and a price, and that will plot continuously through the Globex session. So I can quick and easily see where the high and low was prior to the open. But if you want this to continuously plot a line or a hash, or however you configure your plot to plot, if you want that to plot continuously from Globex, you can come up here, alternate data, show Globex pre-RTH, and you can see this Globex line, how it stair steps down through the day until Globex starts, and there it is. Now, in this case, Globex high is going to print continuously across the chart because it looks like about the opening bar, maybe the second bar after the open, that was the high of the Globex session until we opened. And we opened here. So on that bar, we broke Globex, but that still remained Globex high through the entire night session. Now, I have a lot of lines on my chart most all the time, and I don't want to see it that way. But I do give you the alternative to set it that way if you'd like. Now, another thing as far as the start times go, so I'm looking at the 8 o'clock open and the 8 o'clock equities open. Now, my previous day's open was here. And then it starts to plot yesterday's, and it plots yesterday's going all the way across until the open of today. And then yesterday's open stops, or what we consider yesterday, the day before is actually, and then this was the open of yesterday starts to plot yesterday's open. Now, sometimes I do and sometimes I don't, but in the previous days, I consider the previous day's values to be of significance. We can see yesterday that this was the open up until yesterday and the previous open, and price came right up to that previous open and dropped. Okay, so I'm going to try to keep this short and simple and not talk so much about methodology, but talk about the characteristics and what the indicator has to offer you. But from the drop-down menu, we can go to alternate data and reset start times on session break. If I click on that, now this was yesterday's open. And on the session break, we mark this as yesterday's open. So we can do it either way. We can look at it this way or we can look at it this way. This way still adds additional lines on your chart, but the way that we have this devised is we can come up and we can turn yesterday's start times off, and now we don't even see those on our charts anymore. All we see is today's open, today's equities open, today's, and yesterday's start times aren't even plotted. If we go back the other way, even though if we don't reset them, even though we're not looking at yesterday's start times because we have those turned off, this was still the open and doesn't reset itself on the session break until the next open actually occurs. So I continue to get those lines, and I can't turn off the open without turning off today's open. I give you the option of looking at this either way you want. For right now, to add less clutter, we'll look at it this way. Okay, now, also in the alternative data, and the reason why I've stuck in all of this in alternative data is that every one of these causes a chart refresh. If we're going to use a 1-minute secondary time period, or we're going to show Globex, or we're in the last case we're going to use the regular trading session high and low instead of yesterday's Globex high and low. All of these cause a refresh because they all take a different calculation to plot those lines, and we have to go through those calculations to get them. But if I were to left click here, use yesterday's RTH high and low. And I plot this and I look at a few more days here because yesterday was not a good example of that. We can see that the high of the previous day on this Thursday in the regular trading hours was here because we didn't open until here. We made a new high in the regular trading hours, which now we plot as our high of yesterday. Whereas in the Globex session, our high was all the way up here. I give you the option to look at this either way you want. During the day, you will always be plotting the high and low. We can see that the low now, this was Globex low, and the low now being plotted today, so as I can see it, this is the low of the regular trading session, and this is the low of our Globex session. So use 1 minute data. We can reset our start times on session break. We can show Globex pre, and we can use regular trading hours high and low. I'm going to turn the use regular trading hours on high and low off because I look at the high-low. I personally look at I look at it both ways, but the majority of the time I want to see the high and the low of yesterday's complete session. A couple other things that I'm plotting on this chart is I'm plotting missed highs and missed lows and open gaps. The green dashed lines are missed lows. The black dashed lines are missed closes or open gaps. And the reds are missed highs. I can see that this chart ends and my data ends on this last Friday of 2/7. So I can see that we still have an open gap from February 4th at 96.67. And if we plot this all the way back, here's my close of the previous day. We've traded up and down, and yes, we've penetrated that low. We are not considering yesterday's close. We aren't even considering it an open gap until the open of the session. So in this day's case, this was our 8 o'clock bar, and we opened right here at the bottom of this bar, right at the close. That's actually the close of the 8 o'clock bar, and we open right here. So that is our opening price. This wasn't a gap until this market opened its regular trading hours. At this point in time, if price were to come back down and penetrate, or at least one tick through this line, a touch of the line does not fill the gap. Not the way that I have this coded, or the way that I think in trade. So price would have needed to come down here and been one tick below this, and then we would have no longer seen this opening gap. It would have been filled. Since it didn't, we start plotting the opening gap. We start plotting the opening. The low of yesterday is an open, and it gets plotted all the way across. And the highs, this is an open gap. And until price comes down to penetrate this line, it will remain an open gap. And then I do the same thing for the highs and the lows. And now you ask, well, what relevance is that? If I look at this and I come down and I scroll down a little more, the relevance that I see is most markets, and crude especially, will take out the high or the low of the previous day, but not both. On very, very rare occasions will you see price of the current day take out both. As a matter of fact, let's try to look back and find a day that that might have happened. I don't know if we can. I'm still looking. You know, here, we couldn't even get here. High of the day held, didn't take out either one. I'm still looking for a day. I know there'll be a day. It's very rare, but it does happen on occasion. Okay. Here's an occasion. Now, it didn't necessarily take it out and confirm it, but price did get below yesterday's low. And towards the end of the day, price did get above yesterday's high. There would be, if I go back, hell, I've gone all the way back to, we ended here on 2/7. I've gone all the way back for a month and don't know that I found an occurrence of that situation. But what I'll find, what I see, is we're making a lower low previous day, a lower low. Not quite a lower low, maybe an inside day right here. We break it, until at this point we're in a downtrend. Until we can break the high and start making higher highs, I know that in the big picture we're in a downtrend. Now on this day, we take both out, we finally break the highest high, and now we're starting to break the highs of the previous day instead of the lows. And I know that the trend that was down has now changed, and now we're going to the opposite direction. And this is something everyone should be well aware of, is looking at your previous lows and looking at your previous highs, and are we making higher highs or are we making lower lows? And once we break that trend and start making higher highs, just be aware that if you're going to trade against that direction, to be more careful, be more realistic, have smaller targets, put on less risk if you're trading opposite the bigger trend direction. I think everybody looks at open gaps. We have an opening gap here. Price opened here, never filled. Once we opened that gap and price couldn't come down to fill that on this day, that is a heads up for me that price is more than likely, even though we've made lower low, lower low, lower low, on this day, I have a heads up before it even breaks the next day highest high that we have an open gap. Couldn't even come down and fill the open gap. Now we're back in towards an uptrend. I can see from my missed lows that now we've made this bottoming pattern here. I can see that there's supply in this area right here. And on 2-3 we have a missed low. On 2-4 we have a missed low. On 2-5 we have a missed low. I start seeing these stack on top of each other with my open gap. I definitely know, especially if I was a swing trader holding these positions overnight, that, you know, jump on, and until we can start coming back in the opposite direction, price is heading up. This is telling me that. So we're looking at missed. We're looking at missed highs. We're looking at missed lows. We're looking at missed closes. We're looking at Globex, Globex high and low. Now, here's Globex here, high, and Globex low here. I can turn them off and not display them. I can turn them back on. I can turn them on or off individually. Same with my start times. Let's just say that you guys that you only want to look at one start time, or you don't look at an afternoon start time. Then I have an afternoon start time here. You don't want to look at that. We'll come down to your start times and turn that price off, and that won't ever come onto your play. If you only want to look at the opening price and you wouldn't want to look at the equities open, or if you were looking at equities and you want to look at that open and you don't want to look at the initial balance or the opening range, or however you want to set this up between three price to show you three different levels of price. We can turn on and off yesterday's. We show yesterday's high, low, close, and then we show the previous day's close, all of which can be turned on and off individually or all together. Show missed. We can turn those on and off, show the high and low. So if I don't want to see this dot and these labels, I can turn that off and the highs and lows are gone. It all depends, it's all of an opinion of what you want to see, when you want to see it, and easily being able to turn that on and off. I give you a reset all, meaning I can turn everything off or turn, if I go back through here and I might turn Globex off, I might be playing around with my chart, and now I want to reset everything back to the default and show everything. I don't want to go through the process of turning each one of these things on and off individually, so I give you a reset button that says, okay, turn everything back on, and now I'll just come up and turn that off, and this is probably how I would be looking at my chart. As with all of my indicators, I can middle click the icon and everything gets hidden. My labels, my price labels, all of my lines, middle click again, and they're all back here again. So I look at a half a dozen indicators. VWAP's probably my most important. I look at this. I look at pivots. I'm looking at ranges. Another thing that's important is taking a look at, in my opinion, is taking a look at what was yesterday's range. Okay, what was the high and the low? Regardless if you're looking at the Globex session or the RTH session, how many ticks was it between, if you take the high and you minus the low, how many ticks was that? Okay, what about the previous day? Okay, what about the last 5 days? What's the average range of the market you're trading? In crude, that usually turns out to be, here recently it's been 125 to 150-ish, give or take, give or take some. So if I'm getting in the market and I'm going long here at 97.26, okay. Now, this was kind of an odd day because 97.20 to 98, 90, this looks like it was a 200 plus tick range day. Well, that's out of the ordinary. If I were to get long here and my average range of the last 5 days was 136 ticks, how can I expect to get 200 plus ticks out of the market if that's not what the market has been giving me historically? Sure, it happened on this day, and on rare occasions it will. And if you're a swing trader, you'd be looking at, instead of the average range of the last couple days, you might be looking at the average range of the last couple weeks if you're holding this into the close and you're playing for the bigger targets. I'm just saying you need to be, whatever you're trading, you need to be realistic within your targets. Have a good risk reward. Make sure you're getting at least 2 to 1 on a risk reward at minimum. Shooting more towards averaging 3 to 1. That way if you're right 40, 50, let's just say 50% of the time, and you're getting 3 to 1 on your money, you can be right 5 times and wrong 5 times and make a lot of money. Whereas if you're shooting for 1 to 1 targets and you're right 5 times and you're wrong 5 times, you're losing money because of commissions. It's very important outside of this indicator, outside of anything, risk reward, protecting your capital, one of the most important things that you can do in this business. Let's continue on. So we went through all the alternative data. Did we talk about the use 1 minute data? I'm going to do it real quick if we didn't. I'm sure we did. If you're using range tick charts, those aren't going to give you proper times. If you're using bigger minute style charts, I want things to plot after 1 minute, not after 60. We can reset our start times here on session break, or we can let them go between. Globex high and low, start times. I'm assuming that some of you, I would suggest you go look at my VWAP presentation. I know it's going to be a little long, but VWAP's a really important indicator. And I just can't express how important and the relevance that I find in that indicator compared to anything else that I've played with. And trust me, I've played with, in the initial parts of my career, I was the holy grail searcher, and I have played with hundreds, if not thousands of different indicators, and honestly, most of them are absolutely useless. If you want an oscillator, pick an oscillator, a stochastics, a momentum, a CCI. You don't need 4 or 5 different oscillators. And I personally don't use moving averages. I do on a daily chart. I mean, that's what moving averages were designed for, in my opinion. They're looking at a 20-day moving average or a 50-day moving average or the 200-day moving average. Your larger institutions and your swing type traders, they're looking at those averages on a daily chart. Well, what does a 20-period moving average mean on a 366 tick chart? All it means is the last 20 bars, the average price was this. Well, I never could find the significance of that. Some traders die by them. Some traders live and die by Bollinger Bands, and I can't get my head around those either. Regardless of what you use, as long as you've studied it, as long as you've played with it, as long as you know the tendencies of how they react to the market that you're trading, well, then they have significance for you, and that's great. These are the indicators that I have on my site. The indicators that I sell are indicators that I use on a daily basis to trade, and are those that I find significance in. And if I didn't personally use them within my own trading, I would not have them on my site for sale. There's just so much clutter and bull crap out there that you can be inundated in theories, and I'm ranting and raving. Missed, high, low, all concise, all the plots are completely configurable. We go into our indicators, we look at our price times. Here's the alternative data which we had up here. We can set this, we can set our price times, we can set our Globex to whatever price time we want. We can label our label offsets. We can change our fonts, make them bigger or smaller. We can hide them. We can not even show them at all. We can hide or show our price labels over in our price column. We can label the start times for today and yesterday, whatever you want. All of our plots are completely configurable. We can come down here and change them to whatever you want. If you want to look at lines, dashes, whatever. The reason why most of my indicators have hash instead of line, and this would probably be good for somebody to know, is no matter what indicator you're using in Ninja, depending on how they're coded, and most of them are coded this way, that if I were to use a complete line on my chart, a continuous line, what would happen at session break is this yesterday's high, I'd get a straight up line right here to here, and then it would go across. And every one of these would have lines going everywhere on my session break or on the break of whenever I change those values. I do not like seeing that. It's just, if you change your indicator to a hash line or to a hash or to a diamond or a dot, that will stop that problem. Now, you do have to live with the fact that if you open and you're looking at your chart on a basis of something like this, and you look at diamonds or dashes or dots, they're going to be a little further apart. You either live with the lines connecting, or you live without them this way. I'm okay with living without them, without the lines connecting. I'm sorry to take so much of your time. I believe I've covered anything. If there's any questions, just give me a holler at edge@htech.net. Put a little message here in YouTube, or contact me through Skype. Thank you very much, guys. Good trading to everybody.